All right. Today, I think we'll go into a little more detail than we usually do. And instead of just looking at the levels, I'm also going to talk you through a few scenarios and a couple of things to keep in the back of your mind. All right. So first things first, there's going to be plenty of people that want to speculate whether or not this was the top and we're going back into a bear market from here, or whether or not this was the bottom and we're continuing a bull market from here. Now, I did draw this arrow from SPY 420. I thought there was a very good chance we would get a Q4 rally, but I'm very flexible. And when I do my analysis, I always rethink what I think is likely going to happen. And I must admit, I no longer think this is a slam dunk that we're just going to get this very strong Q4 rally and it's going to be very smooth ride to higher prices. So first things first, I need to go ahead and delete that arrow because I don't want to mislead anybody or misguide you. We've had plenty of rallies from 420 and from 410, which I told you were great risk-reward long ratios. And by now, you should have had plenty of opportunities to lock in profits, and both of those trades were very profitable. But moving forward, I would rather view this as a trading range and not whether or not this was a top back in July or whether or not this was a bottom at the end of October. Now, yes, this could be a top, and yes, this could be a bottom. But more importantly, I want you to think as a trader, does it really matter? So for example, going into the weekend, as a trader, you could be 100% cash and you really couldn't care less whether we start going higher or lower from here. You are just looking for the next best trade setup. So I want you to think in that manner and not worry about whether you sold down here or sold up here, or you shorted too early or you didn't short yet. All of these are just part of your trade plan, and everybody is going to draw up a different trade plan. All that really matters is that your trade plan is managing risk. And this week, if you did try to short, it was a very difficult week to manage risk. Now, the reason I say it was difficult to short this week is because we kept gapping up and then just running and closing near the high of the day. And this is not a very healthy rally, and this is usually what you're going to see in a bear market when you get a very impulsive counter trend rally. So I'm not convinced that we are still in a bull market. I think there's actually a great case to be made that we could be going back into a bear market, and this could be one of those face-ripping bear market relief rallies, and this is still very early to call it that. And no, I am not saying it is definitely that, but there's a very good chance from here. You really need to be very flexible on how you view the market. And yes, we are still in a downtrend of lower highs and lower lows even after this very impulsive rally. So do not stress too much about whether this was a bottom or whether this was a top. Focus on what I always try to tell you to do, which is set up a trade plan prepared for either scenario and managing risk around the critical levels. So from there, I want to go ahead and go straight into the analysis of what those critical levels are, because that is how you should be structuring your trade plan. So the first thing we need to address is how unhealthy this week of price action was. And yes, while we did capture a lot of this move with bullish trades on both the Stock Channel Discord and Bank Trade Alerts, this is not something that you should see in a market very often. This is a very unhealthy move of leaving open a lot of gaps to the downside. And not only are there open gaps, but they are extremely large gaps that are very likely going to fill. Now, that doesn't mean it's a slam dunk short and we're just going straight down to fill all of the gaps and you're going to make a ton of money shorting. It's still going to be a very difficult and tricky ride. However, there's a very good chance those gaps are going to fill before the end of the year, and there's just no real guarantee how it's going to look. So first things first, we need to address the very obvious thing on the chart is that we are now entering a very strong supply zone, and that is going to be this zone between SPY 436 up to about 440. And there is even going to be room to take us all the way to the downtrending resistance trend line right around 442. So in the very short term, this could look like a very tempting short position because we are reaching the supply zone, and there's a good chance it will end up being a good low risk short entry. But do not be surprised if we push through it temporarily to reach that resistance trend line before we start to see any downside. So in the very short term, I told you this was the least likely probability that we just went straight up with no pullback. However, that didn't mean it was impossible, and as you can now see, that is the scenario that played out, where we just had that very face-ripping rally where we just went straight up all week long and got straight to the supply zone without any pullbacks at all. Now again, low probability does not guarantee it won't happen. Anything is possible in the stock market, and it's a matter of whether or not you can stay solvent while the market is remaining irrational. If you look back to that very impulsive bear market relief rally in March of 2022, you should know exactly what I'm talking about. And then even more just recently, we also had that gap up in July and had a very strong rally, and then eventually came crashing back down to fill that gap as well. So it was just a matter of whether or not you could uncomfortably hold any short positions during that upward move before we went down and filled the gap. So what I'm trying to say in the short term, risk reward is starting to favor the sellers, and the bulls that are smart will start locking profits, and then the bears will start taking opportunities to take short trades. And I do expect to see some of these gaps filling to the downside. Even though we may not fill all three of them, we should at least fill the most recent gap, which is right there, right around SPY 430. So again, I'm not drawing the arrow as this is absolutely going to happen. Of course, nobody knows for sure. It's possible we already saw the top at 436 and we start to pull back immediately. So what I'd rather you be prepared for is just understanding this is the critical resistance zone between SPY 436 up to about 440. And if we break 440, we'll go all the way up to about 442 to 443. From there, we should have plenty of sellers that are willing to lock their profits that bought down near the lower prices. And then, of course, we'll have the bears stepping in who want to take low risk short entries. That should be enough downward pressure to start closing some of the gaps to the downside. And then once we fill those gaps, I've been talking about this for many days now, that eventually we need to see a higher low into a higher high before we can start to say this market is looking more bullish. The reason I say that is because the current trend is still lower highs and lower lows, and we need to see a higher low into a higher high to say the downtrend is reversing. Now, even if we get a higher low into a higher high, and let's say it looks something like this, it is still possible that this is a bear market relief rally and we could still get that next leg lower and start a bear market. So this is where I would say you need to be the most flexible trader you could have ever imagined, because even in this bearish scenario, it's possible we get a lot higher before we roll over and start to crash back down. So this is going to be tricky, and this is why in the Stocks Channel Discord I've been spending so much extra time explaining all of these scenarios, especially in the members video. And if you're not in the Stocks Channel Discord, this would be a great time to join if you're looking to further your education, because I'm going to be spending more and more time going through all of these scenarios as it plays out. So just a very short summary, this is a very critical resistance and supply zone that SPY is now entering, and we do need a higher low pullback at some point to confirm a bull trend. There's just no way we're going straight up like that with absolutely no pullbacks along the way. So it may seem like this is getting very difficult to trade if you're trying to short it, but again, that is why I told you down near these lows, this was an opportunity to get low risk long entries, and this was not the time to be looking for short trades. If you took my suggestion, hopefully you made some money on the way up, and hopefully that prevented you from shorting a very impulsive bounce. If you did short this rally and you're currently underwater on your position, the only thing I can say is that happens and you just need to learn from it. When everybody is getting bearish and everybody down here was screaming the sky is falling and we were getting extremely oversold and washed out, it is very difficult for the market to keep going lower when it's already had a full-blown correction and everybody that wanted to sell already sold. So that is why you get these V-shaped rallies, because everybody was selling, there were no sellers left, and then as soon as we start to get any buying, it's a very easy trip higher because there's nobody to sell because everybody has already sold, and the bulls that were buying down here were looking to take profits at much higher prices. Now these aren't going to happen all of the time, but I've seen them plenty of times and they're very easy to spot the longer you've been doing this, and that is why I knew to buy down here instead of trying to sell, and that is why I knew not to short on the way higher. So in the very short term, look for critical resistance where we currently are closing this week, and then to the downside we have this support zone right around 430, and if we break down below 430, it's very likely we come back down to this rising 200 daily moving average and close this gap right around 423. So the chance of a pullback is getting very elevated here, but it doesn't mean we can't go into the 440s before the pullback starts. So just keep all of that in mind as you develop your trade plan. On the NASDAQ 100 triple Qs, we were up 1.17% on Friday, and because I spent so much time on SPY, we're just going to go through the critical levels, and on the triple Qs, that critical supply zone is going to be right here, right around 370, which is our downtrending resistance trend line and our previous high. And if we break out, that is going to look like a bull breakout, but do keep in mind at some point we will need a backfill of a higher low pullback, which will easily fill some of these gaps to the downside, and we're looking for those gaps right around 363 and 357. As long as the bulls can hold above 355 and put a higher low in, it's possible we continue to push higher and get that quarter four rally. On the Dow Jones, we were up 0.66%, and we're already at the critical resistance right here at 341, and the resistance trend line is just a bit higher right around 343, and there is a gap fill right around 344. So again, again, even if we push a little higher, look for a pullback very soon. And the most likely supports for a pullback will be the gap fill right around 338, the support zone at 336, and the gap fill at 333. On IWM, we were up 2.72%, and again, a very large gap up, and we're reaching the resistance zone at 176 up to about 180, which is also going to be a gap fill. And from there, we'll likely get a pullback to a higher low, which could take us back down towards 170 to fill the gap. On ARKK, we were up 5.64%, and we've had 2 large buying volume days in a row, and a lot of that is likely short covering, and we're sitting right here at the critical resistance at 40.5. So if you remember back, 40.5 is the critical resistance that the bulls need to break. So if we can break this resistance and get a higher low into a higher high, it is possible the ARKK bear market is ending, and the higher low would be somewhere between 38 and about 35. On the VIX, we were down 4.73%, and the VIX continues to crush below 18, which does favor the bull market scenario, and we're only going to start considering a bear market if the VIX can get back above 20. On Bitcoin, we're still churning around this resistance zone at 35,000, but we do have the bull trend, and at some point we could get a pullback, but as long as we stay above 32,000, stay bullish. On Tesla stock, we were up 0.66%, and we're getting very close to the critical resistance at 230, and if we break above 230, look for the gap fill at 242. If we get any pullback from here, we're likely coming back down towards 208 and the gap fill at 206. On Apple stock, we were down 0.52% after earnings, and we did fill the gap to the downside at 174, and it's still possible we need a higher low pullback to about 171 before we continue higher towards this gap fill right around 191. So jumping back over to the S&P 500, hopefully you appreciated the extra detail in the beginning of how you should be viewing this market and structuring your trade plan, and just be very flexible because no matter if this is a bull market or a bear market, you're going to see a lot of the very similar patterns for the next few weeks because we're likely getting the higher low into a higher high in either scenario. I know that could be difficult to understand, but it should make sense the more you start to process the information. It could be a little confusing, but if you just focus on the critical risk levels and structure the best risk-reward ratios, you should start to understand why the market is likely going to move the way that it's about to move. So put yourself in the favor of the odds to make the lowest risk, highest reward trades, and you're going to do just fine. If you want to come crush this market, consider joining the Stock Channel Discord or Bank Trade Alerts, and you can find out how to join either of those services by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.